Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes on Tuesday, the 17th of December. Starting off with Clear Leisure, where we've made good progress since last month's triangle break around the 0.22 level, also breaking the 50-day moving average then. That's currently around the same zone, but the shares have now broken through the 200-day moving average at 0.32. Above that, looking for a best-case scenario target as high as 0.6, which would be the top of a rising March trend channel. Any dips towards the 200-day line regarded currently as a buying opportunity, and ideally the shares remain above that old October peak at 0.3 ahead of any further upside for the stock. Next up, a stock which has made rather gallant progress in the recent past, comes in the form of Lightwolf, and here we will see that the shares have broken not only the initial falling wedge around the 2.5 pence area at the beginning of the month, but they've had a second trend line break at 5.5 pence, and while above that, looking for further progress towards the old July resistance at 9 pence before the situation dies down. The main positive today, of course, is the way that we've gapped through the 50-day moving average. That is normally a very positive sign. We've also gapped up to fill out an island gap reversal, which is another very positive charting phenomenon. And there we have the resistance line target from April as well through the old July peak. So 9 to 10 pence on the cards there, while we hold above the 50-day line at 4.6 pence for Lightwaverf. A few people squealing after the pullback in Oracle Power. Just worth noting that 2 points really, I suppose. Well, actually 3 points. First, that the shares, this was a situation worth looking at, given that the falling wedge break was at 0.25, and I covered that in November. Since then, obviously, we had that first target around 0.7, which was easily achieved. And now the situation after the stock hitting that October resistance line projection from last year at 1.8, which was suggested as a possible target. We've seen the shares actually test that old February peak at 0.94. That's going to be critical now. Above that, we're still in very much bull mode, looking for a retest of 1.8. Below that, one would suggest that the next support down would be 0.7, and that the best of the rally may be over for the near term. The other positive to note, I suppose, is just in the last couple of days we've delivered a golden cross there. So hopefully, if you are a bull of the stock, 0.94 will hold, but there is the risk still of a 0.7 retest before the shares get back on their feet. Next up, a stock which I wasn't actually thinking was going to be a decent charting situation when I looked at it, checked out the chart rather, but Provexis looks like it's in a wide rising trend channel from the beginning of 2017, heading for as high as 1.15 pence. At the moment, we've got the shares holding above that old 0.48 2018 peak, and really that's, while we're above that, the bull argument stays valid. The next target to break is, or the next resistance to break is 0.67, so end of day or a weekly close above 0.67 would open up that 1.1 pence target over the next couple of months or so. On to stock which I think I've covered a couple of times in the recent past, and it's slowly but surely delivered. Predator Oil and Gas. We had the break of the falling wedge around 3.5 pence at the end of last month, breaking then the 50-day line at 4 pence, 200-day line at 5.93 pence today. And while we're above the 200-day line, we've got a best case scenario target as high as a May resistance line projection target of 9.5 pence. Obviously, there is some resistance there from September. It's just over 7 pence, but big target here, 9.5, while we hold above the 200-day line. I suppose the stop loss, you would probably allow it down to the floor of that gap just below 5 pence to give it some wiggle room if you are so minded. On to a stock which is has a bit of chit-chat on the bulletin boards. Maybe just starting here, President Energy just gapped out of its falling wedge there, very tight falling wedge, so above 3 pence and the top of the wedge, looking for further gains towards the 50-day moving average at 3.9 pence. Stop loss, I suppose, the bottom of that gap, 2.6 or 2.7 pence, so we don't really want to see the shares back below 2.7. Good bullish divergence here with a lower low and the RSI holding up, so that does suggest there is some momentum there, even though we have fallen off the intraday peak at 3.4 pence so far. Much more sort of straightforward situation coming in the form of Safestyle. Here you can see a massive green candle there. We've gapped through all the resistance of the recent past in September and beginning of November, and also pushed through the 200-day moving average at 63 pence. A good close above that should take the shares up to the implied target there at 76 pence, and obviously there is much more on offer if the shares can consolidate above the 200-day line with 90 pence plus from May this year. But a very sprightly chart indeed, and only really back below 57, 58 pence, the September peak, really upsetting the bull argument there. Finishing off with TechFinancials, which has not been a great situation in the recent past. Just I suppose a trigger level here for the stock. Yesterday's high 1.7 pence, so an end of day close above 1.7 could allow the shares to fill the gap up to 3 pence over the Christmas or early New Year period. Don't really want to see the shares back below the point, the 1 pence to 0.9 pence area ahead of such a move. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.